Hi everybody, lovely to see you all. I'm going to dive straight in. We'll probably be finishing at about 8 or maybe 8:15. It might go on beyond that, but we're going to try and keep to time today as best as we can. I'll start off, of course, by introducing myself. My name is Andy Agathangelo. There may well be people on the session who've never been to one of our events before, so I will spend a few moments explaining what the Transparency Task Force is. The Transparency Task Force is a certified social enterprise. That means we are an organization that is focused on creating an impact, making an impact as opposed to making a profit. And our purpose is to promote ongoing reform of the financial services industry so that it serves society better. We have a vision. Our vision is that over the years, we will grow and build into becoming a highly respected international institution that is dedicated to helping ensure that consumers are treated fairly by the financial industry. And we believe that being treated fairly by the financial industry depends upon many factors, one of which, a very, very important one, of course, is having an effective regulatory environment. We think it's rather unlikely that consumers will ever be treated fairly by the financial services industry unless we do have an effective regulatory environment. And unfortunately, in many countries, the UK included, Australia included, USA included as well, there are many times when consumers end up having adverse outcomes, let's put it that way, adverse outcomes as a direct result of regulatory failure of one kind or another. So therefore, a part of the Transparency Task Force's role, as we see it, is to try to bring attention to times when regulatory failure appears to be at least part of a problem in the system. And so for that reason, we've held events recently about the interest rate hedging products scandal, the RBS scandal. We've got the event tonight all about Premier FX. We've entitled the event the Premier FX Fraud Fiasco and why it really matters. In a few weeks' time, we've got an event all about Lloyd's, and it's quite likely that we'll carry on running these kinds of events for several reasons. One of them being that these events are a wonderful opportunity to bring the surface to the truth. What I mean by that, to bring the truth to the surface. What I mean by that is the idea that evidence will be shared during the course of the session that might be new to some people and therefore could be useful in helping to rethink what needs to happen from a policy perspective, what needs to happen from a regulatory reform perspective as well. Now, the question I've got for tonight is whether what we hear this evening is compelling enough to do something quite specific. And that specific is to perhaps suggest that Mel Stride, the Mel Stride MP who chairs the Treasury Select Committee, perhaps he ought to ask his committee to take a look at the Premier FX scandal. And by the way, while he's at it, what about Blackmore Bond? What about Connaught Income Series 1? There are many significant regulatory failure cases where for one reason or another, there hasn't yet been the impetus in Parliament to call for an inquiry. And perhaps that's what we might all work together to do this evening, to create sufficient evidence to warrant an open letter going to Mel Stride MP requesting that an inquiry is opened about Premier FX. But let's see how it goes. I'll deal with a couple of housekeeping points. The session is being recorded. We will be using chat quite extensively, so please do use the chat, use it wisely, use it constructively. Feel free to put any contact details, any comments, any thoughts and any ideas. Always try to be constructive. As an organization, we're known for being constructive in our criticism, so always try to be constructive, but don't hold back either. I want to create a forum where people can feel safe to share what they really think. And of course, always be willing and able to back up what you say, because that's a very important thing. Our speaker lineup this evening is as follows. We're going to have Pauline Creasy, Keith Carr and Graham Dyke sharing roughly 45 minutes or so to tell us all about the Premier FX fraud fiasco. We'll then have Richard Emery, another very well-established member of the Transparency Task Force community. Richard's going to be focusing on the banking and authorized push payment fraud aspects of this case. And that should leave us maybe 45 minutes, maybe just half an hour, depending on how it goes, for general discussion and debate. If at any stage you want to make a comment or ask a question, that's fine. Just please raise your hand and I'll bring you in at the appropriate time. Don't be frustrated if it takes a bit of time. Sometimes it makes sense to let the conversation flow before I do that. I'm going to go back to the housekeeping points and invite my colleague Alexandra just to reconfirm anything important housekeeping points wise, and then we'll go over to Pauline and Keith and Graham. Alexandra, please introduce yourself and deal with any other matters that I haven't yet covered properly. Thank you.
Hi everyone, I'm Alexandra, I'm Head of Events at TTF. Yes, so like Andy said, we are recording the session and we'll aim to have it uploaded to our YouTube channel in the next couple of days. And once it's uploaded, I'll send you an email to let you know. You can watch it and share with everyone you know. Also, Andy might have mentioned, please use the chat please use the chat, introduce yourself, make any comments. I'll circulate the chat notes tomorrow in a follow-up email. And also if you use Twitter, please feel free to tweet during the event. I'll put our Twitter handle in there as well as some hashtags you can use.
Very good, thank you very much. One thing we're going to try for the first time, our videos we think are very, very good because they capture the whole event. We're going to be trying to catch small, short snippets of the most compelling points that people make. And for that reason, when Alexandra sends her email tomorrow, we're going to be inviting people to volunteer to, when they're watching the video, identify the really powerful points that they think people are making, exactly what time in the video those points are being made, and then we'll look to try to create little snippets of videos so that when we put it out on social media, we can use those snippets to help people understand the importance of some of the points being made. Okay, I think that sets the scene really, really, really nicely. Of course, if you do make a comment or a question later on, please do take the opportunity to briefly introduce yourself as well. But what I'm going to do now is simply to pass over to Pauline and Keith and Graham to take us through until roughly maybe 5 to 7 or so. Of course, we will invite comment, interaction and questions as we go. Pauline and Keith and Graham, over to you, and thank you very much for being the backbone of tonight's event. Thank you.
Thank you very much, Andy. I'm going to kick off and Graham and Keith will kick in to add bits. There's a couple of slides which Graham's going to speak to. There looks like a lot of information and there's more than 30 slides. Don't be worried, I'm not going to speak to all of them. I've just put the information down so that you can read it at your leisure, because we're very keen to find whether we're on the right track or whether there's a different roadmap to getting our money. We have actually engaged in a lot of activity in the last 3 years. The fraud was discovered in July 2018 and it was carried out by an authorized payment institution. So we're not investors, we are what they call payment service users. We were moving money, we were exchanging it into a foreign currency, and it should be delivered at a destination of our choice, either into a bank account in our name or to a third party that we have nominated. And really an API should not be in a situation where it experiences liquidity problems, but it did, which indicated immediately that something fraudulent had happened. It's really quite a simple fraud from what I can see and what all of us can see, but it's been made extremely complex by the shenanigans in the financial services industry, and particularly in the UK authorities. And we know that a lot of you have had experience already or have researched these things. But it seems like the departments and all the agents, including the regulator and banker, want to blame each other. And it's become Russia in the financial services industry. Everyone says it's not us, it's them over there. And we really have experienced the slippery shoulders experience or syndrome for the last 3 years, and it's been pretty horrible. And one thing that we have kind of learned, that you don't get anywhere by being polite and professional and writing well-written letters with a lot of evidence. We've had all sorts of compliments on our evidence by the Treasury Committee and by the Work and Pensions Committee, who were doing an inquiry on pension scams, because some of our people lost their retirement funds through this fraud. And they said, thought we had professional assistance in writing our reports. But has it helped us get our money? Well, no, it hasn't. and it certainly hasn't helped us with the FCA at all. We got great compliments from Mr. Nikhil Rathi, who's the new CEO, who said he was absolutely amazed at how much we had learnt about the fraud. And he almost implied that we knew more about it than his own people, which was kind of rather an interesting comment. And he said his board was very impressed, but did it help us get our money? No, we are still waiting 3 years on. So something is clearly not going right. We've also tried to speak to the banker, and in fact which is Barclays Bank, and they had a very senior managing director reply to us on behalf of Mr. Jez Staley. Mr. Jez Staley, as you've probably seen him on national news recently, has been talking about all the profits, the very high profits that Barclays have made in the last 2 years, best years on record from the 1920s. And we've been trying to persuade him that refunding our 11 million would make we wouldn't even notice it. And given that clearly Premier FX could not have carried this out without the assistance of somebody within the bank who were helping by perhaps looking the other way or not doing their due diligence or whatever, that this would be a very straightforward solution and would really, really help the victims, many of whom have been impoverished. However, they have resisted this by saying that it's the fault of the regulator. They said it's down to the firm, that they follow the rules. We tried to quote, I found it very interesting, Richard, I think Richard Emery's on the call. Richard was quoted in the Daily Mail, I think today or yesterday, about quoting from the, from the British Standards Institution Code of Practice, which is basically says protecting customers from financial harm as a result of fraud or financial abuse. And it refers to abnormal payments coming in. And we've expressed all of this to Barclays and said, were you not concerned that a customer who had been moving between £1,000 and £10,000 was suddenly sending hundreds of thousands of pounds? And they said, well, you're not our customer. We did see these amounts coming through, but we didn't actually know it was your money. And they have refuted statements by the European Payments Institution Federation that in every step of the payment transaction, the payment process, there is a financial record of the money coming in, where it goes, where it is in the system, where it belongs. Effectively, there's a ticket on every movement of that money. Now, Barclays have said to both the liquidators and the FCA that they can't produce all the financial information to do with Premier FX, and there's actually quite a lot of data missing, which we find quite extraordinary. So that was the situation with them. This guy kept writing to us and saying, you really have to not write to us anymore because we can't do anything for you, which was extremely disappointing. There was one ray of light in all of this, in that we got our reports about the theft accepted in Portugal by the judicial police, and they have registered a criminal case with the courts from November 2018, and that is still ongoing. We got nowhere with the UK police, despite 35 reports being made to Action Fraud on the day the fraud was discovered, and a total of 60 altogether. The National Crime Agency accepted our cases, but instead of it going to the city police, because Barclays were based in the city, Premier FX were originally headquartered in the city, it was sent down to Surrey police because two of the possible suspects, two of the directors lived in Surrey. But Surrey police have a team of 3 people on economic crime, and they took 5 months to read the reports and then said they were too small to carry out an international fraud investigation. And they tried to pass it back to the NCA, who wouldn't take it. They tried to pass it to UK police, national. They tried to get city police to take it up. And what they told us was that basically by that time, nobody would take it. The excuse was given that the founder director was dead, and that the other directors had a clear line of defense to blame the dead guy, and it would be very hard to get the CPS to back it. Very disappointing. However, our case continues in Portugal, and we still have some hopes there. They won't be able to recover our money because the funds were held in the UK. So what we want to hear from you today is exactly how we can achieve that. So Alex, I think you've got my slides. Is that correct?
Yes, I do.
Here we are, the Premier FX Fraud Fiasco, being presented to the Transparency Task Force Group. Could go on to the next slide. as we were saying, we're seeking advice from you, and we're very open to ideas. All we're focused on is our repayment. We are less interested in justice. It seems to be very difficult to get justice, even though most of the directors were clearly involved in the fraud. Who are we? As I said, we are payment service users, not investors. We used an authorised payment institution regulated by the FCA and HMRC for money laundering, and it's covered by European and international legislation, and we thought we were safe. We were either living and working overseas, or we were retirees in European Union countries, or indeed elsewhere. We've got a couple of claimants in South Africa, or indeed based in the UK. Probably more than 50% are British, either based in the UK or living in Spain and Portugal predominantly. There's a couple in the States. We have 7 American claimants. I believe we've got 2 Canadian, and we have 3 Germans and 2 South Africans. Several have been made homeless or pushed into poverty by this crime. Several have had to be repatriated, aged 32 to 77 years, because their retirement funds were stolen. Next slide, please. And also 6 so far have died in debt, which is a very sad situation. And I'm quite sure their deaths were brought on by the stress of finding out that their life savings had been stolen, or their retirement funds had been stolen. The total value of the losses is 11.3 million. We're approximately 200 claimants, the majority retired and the majority pensioners. As we've said to Andy, we're invited for interview at the APPG on the FCA inquiry. We say we are a significant case to consider, even though we may look a small case. 11.3 million in today's scale of frauds perhaps doesn't register very high, and 200 claimants compared with some bigger cases which have attracted more attention, maybe we look small. But our case is very significant because we have very high individual and personal losses, and much larger than the average recent fraud cases. And we've tried to make this point over and over again, that our losses were very life-changing and in fact life-damaging. And as I said, people have had to be repatriated who had spent all their lives working 45, 50 years, retired somewhere in the sun, and then they find that their retirement fund has been stolen. And they've carried on for 2 or 3 years, but then they've run out of money, age 77 and 82. It's very sad. The FCA admitted serious failings early on. I managed to get in to see Andrew Bailey a couple of months after the fraud was discovered with another claimant. We met the head of authorization payments, payments authorizations, because we were trying to understand why Premier FX had been reauthorized in May 2018 under new, more strict European, international and UK regulations, supposedly to give greater protection to the consumer, and also using new technology that was available to make payments faster and more secure around Europe and indeed internationally. And we just couldn't understand how this could have happened. And she admitted straight away that they actually had not checked out Premier FX due to not having sufficient time. We later find out that both Andrew Bailey, who was the CEO at the time, and Charles Randall, the chairman of the FCA, had actually turned down additional resources for this very specific new payment service regulation, which came out in January 2018. They had twice turned down additional resources in 2017 from the Treasury Committee. And I think that needs to be remembered, because you can't then go later on and say, oh, we ran out of time, and therefore we didn't look at the medium and smaller firms and just concentrated on the bigger firms, because that is an open invitation to anybody who's setting up a medium or small firm to realize that this is an easy vehicle for fraud if you're so inclined that way. They also said they admitted serious failings early on, but also said they don't have any money to repay us. So next slide, please. So just to give you a picture of the size of the losses, we have here, as you can see, significant losses. LC&F attracted a lot of attention because there were 11,000 people, but I think the average claimant was around the 20,000 mark, or between 20,000 and 40,000. And if I spoke to a couple of the lawyers there, and they said there was only few that was over 100,000. I don't know whether that's actually accurate, that's what I was told. But we have 25 claimants who range between 170,000 and 550,000. And the reason why, and then you can see the rest, and the reason why these losses are so high is because quite a few of us were selling homes or buying homes. And so I lost my entire money from selling my one and only home in Portugal. I was relocating to the States because my business is out there, my business partners are based out there, and I was joining them. And I got an early warning. I was one of the few people actually to alert the FCA that something bad was going on, because my money didn't turn up when I was trying to buy a house out there, and I still don't have it. I also lost my daughter's university fees because they were supposed to be delivered. I had a regular payment process going through Premier FX. They didn't turn up either. I later found out her accommodation fees had also not turned out. It just went on and on. So you can see from these figures, you can read them at your leisure. We firmly believe we did nothing wrong because we followed all the rules which have been advertised by the FCA and the Government Money Advice Service. We used an authorised firm on the register but still had our money stolen. Why did this happen? The FCA register, in our opinion, gives poor and misleading information, and notably did not state that authorised payment institutions cannot hold client money or take deposits. Other European registers specifically state on their register, this firm is not a deposit taker. And I think if we'd had that information, I think most of the claimants would not have used Premier FX, or they would have used it differently for much smaller amounts only. So we asked a question, as has Andy and many of you on these forums, why is our regulator performing so poorly in providing adequate consumer protection? When we employed Premier FX, we had no idea they were not supervised, and if we knew that their badge of authorization was meaningless, the majority of us would not have employed them. Also helping them with their fraud was in Spain and Portugal, where the firm had a significant sales presence. The firm was held up and lauded as a successful British firm by the UK-Portugal Chamber of Commerce and by the British Consul and other UK government dignitaries from what was then the DTI and the Foreign Office. So they looked very kosher. I myself originally had some reservations about the founder. For all that he was an experienced FX dealer, there was just something I felt that was not quite right about him. And one of the things I really resent about myself is that I allowed myself to be persuaded by Foreign Office and DTI people who, at the end of the day, would they spot a fraudster? Clearly not. Clearly they'd done no checking either before they were lauding him as a great success story. Next slide, please. So with that short intro, keeping an eye on the clock, how do we get our money? What is the best way? Do we go for crowdfunding, and who do we target? The theft was discovered on the 28th of July 2018. We're 3 years on. We've done a huge amount of work trying to lobby various government departments, get support from the Home Office for the police investigation, from the Treasury Committee. We did have quite a lot of success with the Treasury Committee under Nicky Morgan. My MP was actually sitting on the committee. And during that time, Andrew Bailey and the Chief Enforcement Director, Mark Stewart, were actually committed to keeping my MP and Sir Hugo Swire, who was the MP for another claimant, briefed regularly, as in every 2 or 3 weeks, on their progress, because they said that they would do an investigation. However, with the change in Parliament and a new Treasury Committee, we have actually struggled to get recognition from them, and it's been very disappointing, I'm afraid, with the new chair and the new committee composition. We noticed that the committee is full of banker MPs or ex-bankers who are now MPs, and we wonder whether that is a consideration. We've also had a lot of frustrations with the administrators and liquidators who are largely apathetic and see our case, and probably many cases, purely as a cash cow. The Treasury argue that the FCA are independent and cannot interfere, yet as we all know, the Treasury appoints the CEO and represents the FCA in Parliament. So they do actually have a lot of clout. And as we know with some recent cases, the Treasury have arranged the money for the FCA to distribute when the FCA was severely criticised by Dame Gloucester and others for not regulating authorised firms correctly. So next slide, please. One of the problems is identifying who do we go after, and indeed who are the fraudsters and who was colluding with them. We could look at the banker, who have obviously got deep pockets, but they've equally got deep pockets to pay for many lawyers. And in London alone, Barclays have, as I understand it, in excess of 50 in-house lawyers who are working on their cases and protecting them every day. Other parties, which the FCA tell us they are now looking at, are obviously something to consider. But really, aside from the bank, possibly some other banks overseas who are difficult to reach just by the fact that they're just outside the UK, and the auditors. And I'll come to the auditors later. There's also a very interesting group, which were Premier FX customers who were receiving large payouts 2 months before the firm ceased trading. They were receiving amounts of between 1 million and 10 million. And we have questioned this as a committee many times with the liquidators as to why they were being paid when the directors later claimed that they did not have sufficient customer records to justify who the money belonged to. We're also considering, do we need to go after the regulator if they don't deliver for us? They have produced a censure notice, and some of you have read it, I know, and commented on it to us, and we thank you for that. The censure notice clearly did a lot of work. It was a result of 2 years' work. We would ask, why did it take so long to produce a censure report? And perhaps some of you have got, insights on that. The regulator came to what we thought was quite weak conclusions, but perhaps they've done that deliberately. Perhaps they don't want to publicly criticize the bank. They've decided not to prosecute the other directors. As I said earlier, along with the police, they feel that the CPS will not agree with a prosecution because they've got a clear line of defense to blame the dead founder director. Our view is if they had gone for the other directors, because clearly they were involved in the fraud. During 2018, Peter Rextra was actually quite ill, and the other directors were running the business. They were the ones that put in the application to be reauthorized. They were the ones making the payments, the very large payments, after Peter died and 8 weeks before the firm ceased trading. They planned their exit very well. They knew what they were doing, yet they've pleaded that they were just answering the phones. They didn't really know what was going on, that the founder, ran the whole business. But we tried to argue with the FCA that if they'd gone after the staff, it would force the bank to reveal the missing data by going after the Premier FX directors and staff, because they would immediately turn around and say to the bank, we need this data to prove we did this and we did that, and to justify themselves. So we do actually think that is a very important thing which has been either missed deliberately or otherwise. Although we have regular meetings with the FCA every 3 months, my committee and my colleagues, we don't actually feel we're told anything. It's all put in very general terms. They won't even mention that they're talking to Barclays. It's always as in other parties. And as you will see later when I've highlighted some of the censure report, there is big ifs as to whether they will actually do anything. So the dilemma for us is the FCA helping us claimants. We want to trust them. They asked us to trust them, and we have for nearly 3 years. But why is it taking so long when the banker to the firm for 12 years knows or should have known what Premier FX were up to, all had serious concerns? And the bank's relationship director went missing days after the theft was discovered and has never been produced for interview, certainly to the liquidators or the administrators. The FCA will not comment other than to say that they have interviewed everybody that they need to interview, which is FA speak for basically saying, we're not going to tell you. Next slide, please. Just to clarify, in case anybody's a bit unclear about what a payments institution is, it's a firm that's been given permission to provide payment services. And this was what was stated on the FCA register for Premier FX, and that's their number up there. And you can still get information about the firm online. The money remittance permission was lower down, and it was not clear that this was its only permission. The majority of public don't know what remittance means. Even retired professional people are not entirely clear what it means, and it's easy to exploit by fraudsters. So this is a red flag. The register is inadequate, it's out of date, and it's got incorrect information. It also said that it might be covered by the Financial Services Compensation Scheme. Please contact the firm for further information. Now, the FCA knew that payment services are not covered by the Financial Services Compensation Scheme, so why mislead the customer? Some claimants were then falsely told by some Premier FX staff that PFX was covered by the Financial Services Compensation Scheme, which it was not. So we would say the register should state far more clearly, like they do in Europe, payment services are not covered by the Financial Services Compensation Scheme. The firm is legally obliged to hold insurance and capital protection indemnity to protect your payments. Please check carefully and if unsure, call the FCA contact centre. In our view, that would be a much better, or at least be an adequate consumer protection, which at the end of the day is a statutory requirement of the FCA. It should also state that the firm is not authorised to hold client money beyond a maximum of 4 to 5 working days. Where things went wrong is that Premier FX made false advertising and false statements to customers saying it could hold client money, sometimes with interest, in both forward exchange accounts up to 6 months with a guaranteed best FX rate. It held out that they could set up escrow client accounts while waiting to buy or sell a property in the UK overseas. And for some people, they even held out that they could actually set up a deposit account with online access, effectively operating as a bank. And they persuaded some people, I'm glad to say a minority, to move their retirement funds there when they were based in Spain and Portugal. So why were these false and unlawful statements not identified and stopped during annual monitoring? All of this was advertised on their website. Premier FX were very present in Spain and Portugal in trade shows, and also in the UK at the NEC. Every travel and trade show that was on, Premier FX were there holding seminars, saying all these things, selling all these unlawful services. As I say, it was on their website. They had a document saying client security and regulation, which listed all these services, which in fact they have not got permission to do. So the simple answer as to why was this not stopped during annual monitoring is that Premier FX was not being regulated at all. Next slide, please. Just some more background on what happened with various people in the regulator and with the bank. On the 29th of January, Andrew Bailey admitted to the Treasury Committee that the register had been allowed to fall into historical neglect and that he had not appreciated the importance of the register. He admitted things were coming out of the woodwork in the case of Premier FX and a thorough investigation will be carried out. The Rextrews, this was the family that were the owners of the business, have to tell us where the money is. Not all of these 3 questions have been answered in the censure notice 2 years later, which was published on the 25th of February 2021, which is disappointing, to put it mildly. Andrew is also on public record with MPs and to our committee that Premier FX were not checked at reauthorisation, other than to ask them online, has anything changed from your last authorisation? The replies were not validated and were taken at face value. And I've spoken to other CEOs, including Helen, who I think is online tonight, about whether they had similar experiences, and they said yes, they're pretty certain that everything they have said that they submit as in their reauthorization or in their original authorization was not checked and everything was taken at face value. They said they have not been asked to provide even snapshots, photo shots of bank accounts, and they are quite sure that no one's been to check with the bank. So no checks were being done on Premier's bank accounts or customer money segregation. Mayhem was in fact taking place in the firm, and it appears the bank must have known or should have known, but didn't do anything to stop it or red flag it. In fact, Premier FX were dangerously insolvent throughout all of 2018, and the liquidators have since said that in the 7 years that they have seen, they traded insolvent most of the time, which is an astonishing statement. As we've said, the signatories to the accounts were frantically moving different client monies every day, several times a day, almost every transaction commingling with other client money without segregation and zero safeguarding in its 73 bank accounts. The firm then crashed insolvent 8 weeks after being reauthorized in May. It crashed insolvent on the 27th of July, stealing 11.3 million of client money. Fast forward to November 2020, Charles Randall, who's the chairman of the FCA, in reply to questions 62 to 68 of the Treasury Committee, which were on Premier FX, said that Premier FX fell into a category of light touch regulation due to their size, which was relatively small, and their status, which was not very important to the financial services sector, which appears to be FCA speak for no regulation for the smaller or medium-sized firms in the payment services sector. He was asked to supply further information within 30 days on how this light touch regulation had impacted the firm in practice, given the scale of the theft and losses and the impact on the victims, which were huge and life-changing, and what were the FCA doing about it? Next slide, please. He committed to answering and then wrote a letter 30 days later saying that he could not reply because it may compromise ongoing investigations. This has been the repeated mantra of the FCA and all UK authorities in our 3 years of trying to get our money returned. So I return to our original question at the beginning. Do we trust them? Can we trust them? Do we believe them? Why is it taking so long? We asked the question, why haven't the regulator and bank sat down and put this right? We were asking this when we were attending our creditors meeting in October 2018. We felt it would take them half a day because clearly the supervision has failed in both the regulator and in the bank. Why punish the victims? Why impoverish the victims? Why force people into early deaths and into illness? I think on this slide, I won't talk about the rest of this because it comes up again later. What I want to do is move on to who actually were Premier FX. So they were set up in 2006 as a retail boutique FX firm by Peter Rextrow, who was an experienced FX dealer of 20 years. He'd been a currency trader at NatWest for 15 years, and for 5 years, when he got promoted, he became chief dealer at the National Australia Bank. And in fact, there's quite a few of our members of Transparency Task Force who knew him when he was working as a FX dealer. So his headquarters was in the city in London, and he had his first main sales office was in Almansil, Algarve, Portugal, where customer records were held. You may wonder why Portugal. This is actually, Almansil is actually the center of the Golden Triangle in the Algarve. And in fact, it was a very wise choice because I think a lot of the people who earn good money in the city have got second homes there or have retired there, got massive villas. It's very much golden, it's very much lucrative. There's 2 big international schools there. The expats that are working out there are people with good professional salaries. So he had many good clients, and something that we've asked many times is a retail boutique FX firm would make good money. Most people that run them end up trading anything from making profit-wise, once they've got beyond the first few years, in excess of 30 to 50 million over a 10-year period. So this is a good business to be in. So why did he have to steal? Next slide. They were first registered as an approved API in 2011. And again, this is a red flag because we've spoken to we've done actually a fair amount of investigating ourselves with assistance from some of the claimants and also with corroboration by the Portuguese police, with ex-employees who were working in the firm in the early years, said that he should never have been approved and authorized because he was skimming from customers back then and trading insolvent. And they reckon that things may have gone wrong because he fancied himself as a bit of a trader, and they reckon that he may have done a disastrous trade. And this was why he had to steal so much money in order to make up for the losses. We don't know. The FCA denied finding any information on that. But what the FCA did say to us, and it's in the censure notice if you're interested to read, there was a truly disastrous FX deal done by the other Rextrows, Katie Rextrow and Charles Rextrow, which lost the firm 300,000. They didn't want to do the deal, but they appeared to have been intimidated by someone who is perhaps questionable and may well have been money laundering, who had a 10 million deal going through, and why anyone who was a legal director of a firm would agree to do a trade which was going to cause the firm so much damage. But this trade was really what tipped them over into collapse, because they were already trading insolvent, and to lose nearly 300,000 on one deal would be highly significant. In 2013, banks such as Barclays decided that APIs taking less than 3 million in volume were not profitable enough to hold their own business accounts, and had to find a principal, a larger API, to process their transactions. It sounds quite weird to us that someone else should be putting their transactions through somebody else's accounts. But anyway, this appears to be what has been done. Barclays, interestingly, asked Premier FX to take on a firm called Global Currency Services Limited, which they agreed. What is bizarre, and a clear indication of the absence of due diligence by the bank and zero annual monitoring by the regulator, is that from 2006 to 2018, with the exception of 1 year in 2014, Premier FX registered company accounts of less than 2.7 million, while in reality were moving in excess of 1.6 billion in the last 5 years. Barclays would or should have seen this, yet claim they did not know Premier FX were falsely registering their accounts of under 3 million, which is just totally bizarre. They had a 3-person account team, which shows that Premier FX were extremely profitable to Barclays. You would think that they would do their due diligence under banking statute laws, know your customer, anti-money laundering, you name it. By registering accounts of under 3 million at 2.7 million, this meant Premier FX directors were evading independent auditing over 12 years. Now, when we spoke to the auditors about this, they're a fairly small firm in Surrey, in Epsom, Surrey. And interestingly, they seem to be the auditors to some other dodgy people associated with Premier FX. They came out, one of their partners came out and said they were very sorry about what had happened, falling over backwards to be gushing, but said that the directors brought the receipts and accounts to them and just asked them to tidy them up and put them up on the company's house. And they said that they had no remit to check whether any of it was true, which we, again, just found astonishing. I mean, I come from the aerospace industry. Both Graham and I have worked in British aerospace. We're used to regulations and working with government departments. We've never heard anything like this. It just sounds quite extraordinary, and it indicates to me that there's something quite strange about the financial services industry in the UK, where a lot of things seem to happen where where the operations in practice are not written down. I don't know whether this is a reflection of the fact that Britain has an unwritten constitution, but is clearly something that I think is being exploited by fraudsters. And really, I'm sure the Treasury know about this, and a big question for all of us to ask is, why is the Treasury not doing something about it? So again, this was a big red flag. They should never have been authorised in the first place back in 2011. And if there was any annual monitoring going on, all of these things should have been picked up by the regulator, and the bank should have been seeing these things every day. So just quickly moving on, because I'm conscious of the fact I want to get to some slides that have been provided by the European Payment Institution Federation, but it made Premier FX very confident. So they then opened up more offices in Spain, in Mallorca, in Lisbon. They were hiding in plain sight. They were at all the exhibitions. And as I said, they were held up as a British success story in the Algarve and Palma de Mallorca. You couldn't open a local paper without hearing about what a great company they were and how they were helping all kinds of people, backed by the British consul, who of course has not answered any of our letters since the fraud got discovered. So yes, we'll go on to the next slide, please. I have mentioned already that after Peter Rexdrew died, after heart surgery, an email was put out by Nick Jones, Global Managing Director, saying that Peter had passed away after a long illness, but they had good contingency arrangements because they knew was very ill and that he might not make it. The firm was in good hands, it had robust profits and would continue to trade. This was, of course, all lies. Between that period, between 18th of June and the 26th of July, circa 13 million is moved out of the firm's accounts. Certain clients received large payments ranging from 1 to 10 million. Charles and Katie Rickstrew did not inform the FCA nor the bank about the changes in the firm, contrary to legal responsibilities of new directors. Later claimed they had no customer records to verify clients wanting to withdraw or move their funds. It's highly questionable as to whether the new directors were fit and proper persons to be operating an API. Katie Rickstrew was actually down as self-employed, yet she was acting as a de jure director. We found out, in fact, City Police informed my MP and Sir Hugo Swire that Charles Rickstrew had actually had a UK custodial sentence for fraud. Again, you just question, where is the due diligence here? How was he allowed to be a director? How was he allowed to be a signatory? On the 27th of July, Premier FX just ceased trading and switched off their phones. They cleared all the offices out during the nights. Ex-employees at the funeral on the 20th of July said Katie Rickstrew was changing the SIMs of the work mobiles with new numbers so customers could not reach them. Customers with transactions in play, which includes me, phoned the FCA contact centre early on the Friday and also phoned Barclays to warn them that we thought theft was in progress. I actually asked for the accounts to be suspended and for them to call the fraud police. What was interesting is that neither the bank nor the FCA appeared to know that Peter Rickstrew had died and that new directors were running the firm. Barclays actually told me there were 4 signatories, but claimed, probably because I was making such a lot of noise about what had happened, that they had no idea who were using or authorising the codes in Premier FX to move money at any point in time, either out of the accounts or between the accounts. And again, it just, beggars belief. Next slide, please. So during that day, all of these agencies were contacted: the FCA, Barclays, the Financial Ombudsman Service, Action Fraud, City Police, and no agency in the UK authorities wanted to do anything to help the Premier FX customers on that day. They were all trying to pass us off to each other. Interestingly, as far as my experience was, Action Frauds were the only ones that revealed that they were actually very concerned, but they said it would take 12 weeks to process my theft report and any others that came in. However, he did reveal some important information, that the UK headquarters of Premier FX was simply office space rented by the week or day by Regis, and that several other firms connected to Premier FX were housed in the same space, namely Info Collect Limited, directors Katie Rickstrew, also the Global Currency Services Limited, which was now owned by Premier FX, and the FCA did confirm that that had been purchased with client money. They were all being housed in the same space, including some other companies called Securus Escrow Limited and Clarity Payment Systems. The FCA later denied that these other firms or agents held any significance. But you then question, well, why were these firms set up? Some of them were even registered on the FCA register. The FCA did admit that Premier FX had several overseas accounts to which money had been transferred from Barclays London. The accounts were all empty, and in the FCA view, it was too expensive to trace the money. The FCA claimed in the censure report that Katie and Charles Rickstrew had informed them of their liquidity problems. Now, this was not what the FCA was saying to me, neither were Barclays on the day we were reporting the fraud. So this is either a completely false statement or the FCA did know, but still allowed the firm to crash, taking 11 million of client money. This is a big question, and as you can understand, it does undermine our confidence in trusting them to get our money. We went to the creditors meeting on the 18th of October, where the administrators revealed that a second set of accounts, in their opinion, was being operated and managed on a laptop owned by Peter Rickstrew, which had been given to them by Katie Rickstrew. We later learned a second laptop owned by Peter had been managed by his fiancée and fellow director Severine Edmondson, a Premier FX director, during his illness, which was in her possession for 8 months after his death. And this has been a major complaint of ours about both the administrators and the liquidators, that they failed to seize all the work phones and all the computers from the various officers. The administrators were of the view that criminal activity had taken place. They were also of the view that administration was wrong for Premier FX as they were insolvent, the staff were redundant, and the firm could not be sold as a viable operation. And in their opinion, the firm should have been put into immediate liquidation. That was the FCA that put Premier FX into administration. Their argument is that it's a procedure that they can quickly access at the courts, and they said they had to do it because there was a group of claimants that had gone to court to try and get their money by making an injunction, an application, a freezing order to have their money delivered to them as priority. And the FCA stepped in court, put the firm into administration in order to stop that, to protect the fact that there were other claimants. Right, this slide is about the rest of the administration. The FCA were present actually at the creditors meeting, but they would not say anything. They wouldn't say why they were there. They wouldn't say what their role was. They wouldn't say why regulation had failed. They just said it was not for the administrators to answer this. The administrators confirmed that 240,000 transactions had been retrieved from the bank, which in 3 months of administration had not been fully examined. As I said, aside from one laptop, no computer equipment had been confiscated or retrieved, nor from abroad. There were no interviews of the directors and staff. Online questionnaires had been sent out and returned with no comment. There were charges of 44,000 for meetings with the FCA. There was an 88,000 legal bill and 30K for meetings with the Premier FX directors prior to the start of administration on the 13th of August. Total bill came to almost 400K for 12 weeks work. Very little information, no recovery of computers and work phones, and no interviews of key staff. Not surprisingly, our committee refused all charges and fees, and this has been an ongoing dispute. We were fortunate in that when the liquidators applied to the High Court to access the remaining assets of 1.8 million in Premier FX, the judge has agreed with the witness statement of our committee in saying that there is no evidence of any work that has been done by the administrators and liquidators to justify these fees. And the court has said that the remaining assets should have been distributed immediately in 2018 to the claimants, given the size of the losses. The 1.8 million remaining is very interesting. I'm quite sure there would have been no money remaining in there other than for the fact it was held in Filipino pesos, which is a difficult currency to change. There are rules and regulations around it. You've got to contact the Filipino government, as it had already been changed from dollars to Filipino pesos. And I think that's, I think the directors struggled to get it done, and that's the only reason why that money is still there. The victims' perception of the administrators and liquidators is that they are apathetic and they view these frauds as a cash cow opportunity to charge fees for doing very little. Every report that we've seen from them has been about maximizing their charges. Their priority is recovery of their charges. Recoveries for the claimants are secondary, if at all, and they very much play on the victims' ignorance of law and process. And next slide, please. The next paragraph, which appeared in their reports, kind of sums it up. Basically making themselves a priority. And we're just very fortunate that we met a judge when they applied to access the money who questioned what they were doing. I will leave the rest of this for you to read at your leisure. If we can actually just go on to slide 18, if I may, Alex, please. Yeah. So we're trying to find out who's got responsibility between the FCA and PRA in managing the bank and how they manage their business customers. Is this actually regulated and supervised? And this was the reply I was given by the FCA Supervision Hub, which says that the firm is responsible for all relevant safeguarding requirements. And it actually says, in the view of the FCA, it is not the responsibility of the bank involved if they are business clients. It then goes on to say who is responsible for supervising the payment service, the authorized payment institution. It does go on to say that banks are responsible for identifying their customers and verifying identities. However, it concludes that in such a case, if the PI is authorized, a bank does not need to check what its customer is doing to comply with the AML requirements. We found this very disturbing, as it seems yet again, nobody was supervising anything to do with authorized payment institutions. Now, I've discussed this with a few people and they actually question this, and they're of the view that Barclays or the banks do have a lot to answer for on this specific case. The fact that the relationship director disappeared within days of the fraud, the fact that the bank, Barclays, have denied access to the 3-person account team for interviews by the liquidators, seems to show or prove that they do have a significant amount to hide. If we just quickly go on to, yes, slide 20. There are 2 charts from the European Payment Institution Federation which show that the payment service regulations of 2009 and then a new one, a sharpened up one, which was brought out in 2018. There were 5 conditions to ensure consumer protection, and particular safety in the process and transparency and clarity of each stage of the transactions in an authorized payment service or remittance. And I'm showing you these charts, and they're a bit detailed, and I'm not going to talk about them now too much, other than to say that there will be some of you who will know more about this than I and my colleagues do. But clearly there is evidence here that there should be a transaction record and registration number on each stage of the process. So if anything goes missing or goes wrong, it should be transparent where it occurred. Premier's banker has claimed it could not identify all Premier FX transactions and could not or would not explain why large periods were missing in the data they provided to the FCA and liquidators, which curiously and interestingly includes some of the transactions that were taking place of between 1 and 10 million after Peter Extra died. Clearly, this is a huge red flag. Next slide, please. So here is what the people who drafted the payment service regulation out in Europe expect to happen in terms of the flow of transaction information and funds. On the next slide, they go into some description about each stage. And then moving on to the next slide, going to 24, please, Alex. This also, which I assume is some sort of overlay on the previous model, shows how the foreign exchange money transfer process takes place. Now, this all looks like provides a lot of clarity and transparency. So we're hoping that we can get some better brains than ours who understand the FX world to actually help us. I know Paul Carlier is not on the call tonight because he had another engagement, but he's actually provided us with a lot of useful information and confirmed that there is a complete record at every stage of the process. And he says a bank that's claiming different is basically misleading the inquiry. So we then show our letter, I won't go through it, that came from the FCA enforcement team when they published their censure notice. And this was a letter, I'd love you all to read it at your leisure, which basically explains their reasons for not prosecuting the directors, which caused a lot of angst, I have to say, amongst many of the claimants, because of the 200 claimants, most of them did not know Peter Extra, the founder. They dealt with Nick Jones, the global managing director. They dealt with Severine Edmondson, and they basically dealt with other people, all of whom were signatories to the accounts. And it concerns them as they see it that they're getting away with impunity, or certainly not being forthcoming and giving information. Interestingly, I managed to track down Nick Jones recently, and he told me that he was never invited to be interviewed by the FCA. He actually rang them up and offered to come in. And he said he did have a conversation with them. And then he said he had a second one where he felt he was being interrogated. And he said he wanted to come in because he said he has also lost money. And he said he was completely blown by the fraud. I have to say most claimants find this very difficult to believe. The FCA have argued in their censure notice that Peter Extra was clever in hiring people who, I think they have found a more polite way to say this, but he said they weren't very polite or were easily, weren't very bright, and that they were easily put under his influence. Again, we find that quite extraordinary. Nick had a serious career in BT as a general manager out in Gibraltar, running the whole of BT's operations out there. That doesn't sound like someone who was suffering from a shortage of brains. Equally, Catherine Evans was an ex-senior manager at Lloyds Bank. In fact, he had some very good people who were doing the sales and business development and the selling and luring in retirees to send their money to them when they were buying properties overseas to retire to. So, you know, we're not buying any of that at all.
Should we do
31, so I'm just finishing very quickly. Yeah. The next slide is that the trust us and get the money has shifted. And again, we want to put to you that we're concerned about whether the shifting goalposts are going to stop us getting the money. They're basically trying to use Peter's death to draw a line under the affair, as they probably don't want any more bad press. However, as I've said before, we think the whole period when the other directors were running the business should be examined, as this is when many of the fraudulent actions were taking place. If we go to the next slide, we also asked why they're not taking any action against Barclays. We've tried to speak to the PRA, by the way, about what their role is in regulating Barclays and whether it covers their supervision of business customers. And interestingly, they've had to take the question away to go and examine it further. So I haven't got an answer to that. But our argument is it cannot be that with all the safeguards the FCA have alone to regulate banks, that all this happened without either Barclays knowing something was not right, or alternatively, they were not paying attention and were negligent and did not even fulfill their most basic regulatory obligations. So surely there's a case to answer. So next slide, please. This is where we need help. Who do we target? How do we get this information? If anybody's got any ideas or clues, we would really be very open to your ideas. We are concerned that after 3 years, we don't know whether the FCA are going to come up with our money. They say that they're talking to other parties. They're continuing their investigations, but there is a lot of ifs in that censure notice. I've put the various quotes in it in the previous slides, which you can look at at your leisure. So final slide, please. 36. This just sums up how we, the committee, and most of the claimants feel. We feel huge disappointment at the realisation of the failures of the FCA and Barclays Bank, that organisations such as a UK regulator and a UK bank can operate in such a non-regulatory fashion. Sorry, I'm on slide 36, Alex. Yes, sorry. And also we've become concerned and disappointed with the Treasury Committee's unwillingness to challenge the FCA, whose responses to Treasury questioning on our case raised more questions than answers. We've got total disbelief that an organisation such as the FCA is permitted to operate with such autonomy. The Financial Ombudsman cannot investigate the FCA. The watchdog of the FCA cannot investigate what's happened with our case until the FCA complete all our complaints process. These complaints have been held up for nearly 3 years because of the first part of the investigation. And we're now being told that they can now start to be processed. We haven't yet been given any sort of date as to when they will be processed, but most of these complaints were made 2.5 years ago. And that is a very long time to have made a complaint. And you could say, is this being used just to delay, slow down the whole process so that we can be quietly buried at some point? And maybe we have been buried already. To conclude, we've got discussed at the FCA and the banks and the Treasury's unwillingness to accept responsibility for their failings, given the amount of work that we've put into showing where things have gone wrong. It's a total lack of empathy, and which has ended in our disillusionment. And this is where we're here tonight to ask you for questions. If I could just go back, actually, Alex, I think it was, yes, slide 34, if I may. Just quickly, Andy, if I may, there was just some very interesting quotes that we've experienced, particularly in the last 12 months, from senior members of the Executive Committee in the FCA. No consumer ever consults the register. I don't want you to think about that. I think a lot of consumers consult the register. Premier FX were a medium-sized firm paying £1,000 to £1,700 in fees, which does not buy much regulation. These are all being provided, by the way, as excuses as to why the FCA were not looking at Premier FX. Premier FX experienced light touch regulation due to their size in the Payment Services League, and it will be something we look at. Head of Retail Payment Services, we ran out of time to check all the payment institutions. Before the new PSRs came into force, we had to check the big banks and leave the rest. We are very sorry about what happened. As I said earlier, it's an amazing omission when they turned down additional resources twice from the Treasury Committee. Senior Treasury officials said off the record, no one is interested in financial services theft and fraud unless it is big and international. And there is kudos for the UK authorities looking serious about it. And there is a payment relations payoff. Finally, next slide of 35, I just want to tell you what the City Police said. They said this to me in September 2018. We are standing by to take the Premier FX case. Home Office and the FCA are debating how to handle it, and the decision was then taken to send it to Surrey Police as 2 of the suspects lived there. We were very surprised as we had the fraud team with international skills and could easily ask Surrey to go and get them for interview or have them come in or collect them ourselves. Interestingly, there is an MOU between the FCA and City Police for us not to get involved without FCA knowledge and agreement. The FCA have always claimed that the police independently choose their cases to do with fraud and theft, and that the FCA would not interfere with it. This, to me, clearly indicates that they have a controlling influence on what gets investigated. So, we need your help. What's the best route to our money? Have we missed something? Sorry for overrunning.
Don't apologise at all. That was very clear, very thorough and very compelling. Those are my initial comments, Pauline. Thank you very much for putting all that information together and for articulating it in such a clear way. I'm going to cover a few questions, please, before we pass over to Keith and Graham. There's just a few things I want to get absolutely clear in my head. Pauline, question number 1. You've referred a few times to the money being stolen. Is there any doubt, or is there any reason for doubt that something illegal and fraudulent has happened here?
No, the FCA have actually confirmed that they were, you know, in fact, on one of my slides, which I had to skip, I actually said it was clear that money from customer A was being used to pay customer B. Yep. And the FCA have confirmed that they were operating a Ponzi scam scheme for many years, possibly throughout their entire existence. But in the 8 years that the FCA have looked at from when they were first regulated, they have confirmed that they were running a Ponzi scam scheme. And the fact that they were not segregating client money and were moving money from clients to pay themselves or to, and indeed to pay other people, was evidence that something fraudulent was going on.
Thank you. Next question from me. The bank's relationship director went missing. Could you elaborate on that? So do you, I'm not suggesting you mention the name here if you do know the name, but do you know who the relevant relationship director was, and what exactly do you mean by went missing?
Yes, we know his name. In fact, we tried to contact him, you know, via LinkedIn. He's still got a profile there, but he's not been on it for 3 years. We were told that he'd gone on indefinite sick leave, and he was on indefinite sick leave for 18 months. And we feel frustrated that the liquidators did not use their appropriate powers to insist that not only the relationship director, but the 2 other account team members be interviewed. Barclays said to the liquidators in writing that Barclays owned all the information pertaining to the Premier FX account, and they barred them from interviewing the account team. They produced a new relationship director to interface with the liquidators who knew nothing about the Premier FX account. So he sits there a lot of the time and says, "I'm sorry, I've got no knowledge about the account because I've never worked on it."
Thank you. Ian Tyler just put a very good point in the chat. So clearly the situation was fraudulent. So clearly the police should have taken initial responsibility for investigating. But from what you're saying, Pauline, it sounds as though there was a reluctance to have the police crawl all over this. That's how I read it. What would your comment be to my perception of what's been explained?
No, it's the same perception we have, and indeed of most of the claimants, because aside from the fact that the CPS might be concerned that the other directors have got a clear line of defence to blame it all on the dead founder, we felt like there was something very wrong within the bank, and there was possibility collusion or serious gross negligence which had allowed this crime to take place, and that in itself should be investigated. We also said, you know, was something happening at the regulator? Was it simply that they were deciding not to regulate them, couldn't be bothered because they were too small, whatever? Or, you know, were they being paid to look at the other way? You know, we felt these things should be looked at, and that required someone independent of an FCA investigation, and it should be done by someone, you know, like the National Crime Agency. That's what they're there to do. They deal with this all the time, where people inside banks have assisted fraudsters. And the fact that Peter was an experienced FX dealer, I think he knew Barclays very well. That's certainly what he told me. I used to run into him quite a lot on the Business Algarve network meetings. He knew the Barclays people before he set up his firm. Because he was probably using the BarX platform. You know, all his FX trades went through the Barclays FX platform. It is apparently one of the best in the world. Many other banks use it. And he intimately knew the people there. And I think he may well have set up his firm knowing that he was going to get the assistance that he needed to keep his accounts not segregated, not to set up dedicated client accounts. What is interesting is there was at one point a sterling account which was protected as a client account, but for some reason the protections were removed in 2013. Now, why was that done? Who agreed to that? That would appear to be, you know, fraudulent in itself, assisting crime. So there is all of that. Also, the directors, particularly Severine Edmondson, who was the fiancée of Peter Rextra, has become an extremely wealthy woman. And so has Charles Rextra. I mean, he's posting pictures on Instagram and Facebook all the time of himself clutching magnums of champagne with a caption saying, "Nobody likes us, but we don't care," in various hotspots, luxury hotspots around the world. Now, where are these funds coming from? Severine has bought 2 huge luxury villas in one of the most exclusive parts of Palma de Mallorca. Where did that money come from? You know, these are all things which we felt the police should be investigating.
The more I learn about this case, the more the word fiasco seems to sum it up really well. I mean, there's just so much wrong here from every dimension you can imagine, from a regulatory perspective, from a risk management perspective, from a investigation protocol perspective. It seems like a complete and utter mess. Pauline, thank you again for giving your information and sharing it in such a clear and compelling way. We're going to go to Keith and Graham, and then we're going to open things up, because I'm sure pretty much everybody on this session tonight, there's 25 people here altogether, have got thoughts and questions and comments. And I think this situation deserves our utmost support. Let's do whatever we can do to get what needs to happen. And what needs to happen is the whole thing needs to be properly investigated. Keith and Graham, could you please pick up from here as you wish? Thank you very much. And kick off with a brief introduction, just so we've got some idea of the context and relationship to the case. Thanks, Graham. Thanks, Keith.
Thanks, Andy. Right, I'm Graham Dyke, one of the 3 members of the liquidation committee. What I would just like to say, and certainly qualify the presentation that Pauline has given, there were attitudes amongst the FCA and probably MPs and maybe the Treasury Committee that the victims are basically people with lots of money and were doing foolish things, and that could not be further from the truth. And I don't know all the PFX victims. There's in the region of 200, but of those that I've got to know, they're no different than myself. I've worked for 45 years, not for myself, for a company. I was lucky enough after 45 years to have a lump sum with my pension. And it was that lump sum that we invested in a small apartment in Portugal. And in selling that apartment and transferring the money back for our pension and to use on doing other things than traveling to Portugal, that money disappeared. There are victims just the same as myself who were lucky enough to accumulate similar monies in the hope of buying properties over in Portugal, and they've lost their money. Huge sums that came from their pension pots, none of them wealthy, none of them rich. And the frustration is that because of your ignorance, never having found yourself in this sort of situation, you're so disappointed to find that, firstly, nobody is interested in your problem. The banks are not interested. The FCA is not interested and will do anything they can to distance themselves from it. And the Treasury, MPs will support you, but MPs, they'll do it as much as anything for a vote. But some of the MPs have been extremely helpful, but there's many other MPs that have shown no real interest whatsoever. So all in all, it's very disappointing that one time in your life, when you put your trust in these organisations such as the bank and the regulator, only to find that although they've got such a name worldwide for their regulatory abilities and control, in actual fact, there's nothing there. It's just confusion. It's full of regulations that are simply not followed. As Pauline said, I worked for most of my time in the defence industry, and so I'm well aware of the regulatory side of the likes of the MOD in particular, but government bodies. They fill themselves with regulation, pages, documents, books, but none of it is followed. And as we found throughout our investigations, the mistakes and the failings of the FCA are not something that we are pinning our hopes on. They're not something that we think is the situation. We've got hard facts and admissions from the FCA and their senior managers that these mistakes were their failings, and they've acknowledged them, yet they're not prepared to acknowledge responsibility. So all in all, I think that we're just the tip of the iceberg. There are going to be many other members of the public that will find themselves in our situation over the coming weeks, months and years because of the regulatory failings of the FCA. And I'm sure other regulatory bodies in the UK may be no different. Our experience at the moment is focused on the FCA, and it really is so disappointing. That's it.
Graham, thank you very much indeed. Again, very clear and very compelling points that you make. Let's now go to Keith. Then we're going to be going to Richard Emery, who will be looking at this from the banking perspective, and then we'll be throwing it open. So, Keith, over to you, please, for your thoughts. Thank you.
Hi, my name's Keith Carr. I'm retired. I lived in Portugal for 30 years, and I'm now back in the UK. But basically, I lost my my savings, all of it, over 400 grand. And so it's completely really changed my life. I don't really want to waste any more time on this from the committee point of view. I think Pauline and Graham, they've said it all. It's really all there. So me reiterating it isn't going to help. I think what we're really interested is, with the help of anybody, how we can get our money. And that's it. And thank you all.
Thank you, Keith. And it's shocking to hear the amount of loss. I mean, if it was 10% of what you lost, it would have been a huge amount of money to me and most people. Crikey. I mean,
Yeah.
I can't begin to think about how you feel and what impact it's had. Of course. Crikey. Let's go to Richard Emery. Richard is an acknowledged expert on the banking side of fraud and authorized push payment fraud in particular and that sort of thing. I know Richard has an interest in this case as well in terms of understanding what's been going on. Richard, over to you, please, to share your thoughts, and then we'll be throwing it open. I can see lots of people want to say something. Richard, to you first. Thank you.
Bit about my background. For the last 8 years, roughly, so I had a career in retail and payments, and then I got involved in a lot of issues around dispute resolution. And for about 15 years, I've worked as an expert witness in criminal defence in retail theft and fraud cases. About 8 years ago, started to help people who've been the victims of bank fraud, and now I spend all of my time helping people who are victims of bank fraud to challenge the banks. But I also now find myself spending a lot of time challenging the regulator, the regulations, the FCA, and other organisations, and I'm privileged to serve as an ambassador for TTF. So what I want to do was to just do a quick financial overview. But before that, for those of you that are not familiar with the terminology, authorized push payment fraud, which Andy has mentioned, which is what I spend a lot of my time dealing with, comes in two different varieties. There is authorized push payment fraud, which is called a misdirected payment or a misdirected beneficiary. This is a situation where you're trying to pay, let's say you're having some building work done, you're trying to pay Bob the builder, the email arrives with the invoice, but a fraudster has intercepted the email and actually changed the payee details. So instead of paying Bob the builder, you end up paying Sam the scammer. Now that's something which has been addressed with confirmation of payee. It's still in its infancy, it is still a flawed system, but it's going in the right direction. The other area of authorized push payment fraud is malicious payee, where you pay money to somebody and you subsequently discover that that somebody is actually a fraudster. Now, both misdirected payments and misdirected and malicious payees are focused on the sending bank. Now, in this case, I have to be honest, I don't really think we can blame the sending banks of all of the victims, because all of the victims were making genuine payments for genuine purposes, and it's very difficult in light of everything that we know to actually say that the sending banks were responsible. The difficulty is that in the last few years there's been almost no focus at all on the role of the receiving banks in the case of fraud, and this has got to change. We've got to move the focus onto the receiving banks for all types of fraud. Okay, so if we can now just flip on for one moment. Now, here comes the health warning. I serve as an expert witness. I want to make it perfectly clear, I am not expressing an expert opinion. And I say that for the record because it is based on what I'm going to say is based on relatively limited information. And some of that information comes from Companies House. And Companies House data cannot be relied upon. For those of you that are not aware of this, when a company places their accounts with Companies House, those accounts should be signed off by an auditor. Companies House does not validate that the accounts have been signed off by a suitably qualified auditor. This issue was raised with the relevant government departments about 4 or 5 years ago by a major firm of accountants who found their name on the bottom of several sets of accounts and they knew absolutely nothing about it. So if you go to Companies House and you look up a company and you want to rely on the fact that there's 4 or 5 years worth of company accounts, forget it. However, what I'm going to say is based on the data from Companies House because I think it illustrates the point. So if we go on to the next slide, please. Okay, so I went into Companies House and I pulled down Premier FX's accounts from 2008 to 2016. So we have 4 lines. We have the current assets. Now, bearing in mind, this is an end of year position. This is saying on a particular day, this is not about turnover, on a particular day, their current assets were the blue line. On a particular day, the money that they owe to their creditors, i.e. the people that have put money in for FX purposes, represent the next line down, the red line. And obviously there's going to be a difference between that. They've got more money that they're declaring in the bank than the amount of money that they owe their creditors. That is a right and proposition to be. And we can see that it's grown over the years. We can see that they have net assets that have gradually grown, and we can see on their profit and loss account that they were bouncing along and making a profit. You will notice that there is a gap in 2014. And the reason is that if you follow this through, recognizing that these accounts are potentially not even to be trusted, but what happened in 2014? So let's have the next slide, please. Now you look at that and you say, oh, somehow at the end of 2014, the company was saying, we've got over £8 million in cash, of which we owe £7.8 million to our creditors. How did that happen? And I can't explain it, but I will comment on it in a moment. So we can have the next slide, please. Okay, so let's just look at this. What do we know, or what do we believe? Now this is just picking up some of the things that Pauline has already said. There were 73 bank accounts. There was no safeguarding. There are no audited accounts because it was declaring itself as being too small. But actually, you have to question whether or not that was true. And therefore, the question that I end up asking is, did anybody in Barclays get a copy of the accounts, the unaudited accounts, looking at the figures that we've just seen for 2014 particularly, and compared what the company was saying to Companies House with the actual turnover and the financial status of the business at the end of the year? In my view, if the Barclays directors, if the Barclays account managers were not making any effort to check the end of year position between the accounts that were being presented and the actual money in the bank, they have failed in their responsibilities in terms of know your customer. And I think it seems to me that they must have failed. The other thing that's already been mentioned is the link to Global Currency Services. They have the same directors, and they say on their accounts on Companies House they are a micro entity, and they also went into liquidation a year later. But I believe that the relationship between these two companies and the question of movement of money between the two companies is something that has to be investigated, because this may well be where money has gone. So for the next slide, please. Okay, now Pauline has already said this, but I wanted to just emphasize this point. The Financial Conduct Authority is saying a payment institute and an e-money institution, they are responsible for ensuring themselves that they comply with the relevant safeguarding requirements. It is not the responsibility of the bank to do this where they have a business client, because that business client is regulated by the FCA. But is that the end of the story? No, it is not. So these are the last couple of comments that I want to make to just keep things quite brief. So next slide, please. Some of you will have heard of something called the Quince Care duty. Many of you may not have heard about this. This is a very, very contentious subject. It is a subject that if you follow some of what's going on in financial services, it probably comes up in the Lexology blog at least once a week. So I'm going to read this properly through because it's going to be quite small for some of you. The Quince Care duty was first established in 1992 in Barclays Bank, ironically, versus Quince Care Limited, which is where it gets its name from. The court held that the relationship between a bank and its customer was that of agent and principal, and that accordingly the bank owed fiduciary duties to its customer. Consequently, it was an implied term of the contract between the bank and the customer that the bank would observe reasonable skill and care when executing the customer's instructions. Now, the story behind the QuinceCare case was that somebody who had access, legitimate, authorized access to the QuinceCare account, was moving money from that account for their own purposes. Now, I need to say this because it's been clearly established the QuinceCare duty does not apply to personal accounts because you're moving your own money. The QuinceCare duty is a situation where the customer's instruction relates to a corporate or business entity, but that instruction is subject to potential dishonesty. So what was held in the implied term is that although the bank has a responsibility for executing the customer's instructions, if they do so knowing that those instructions were dishonestly given, or shut its eyes to the obvious fact that the customer's instructions were being dishonestly given, or if they act recklessly in failing to make those inquiries into the customer's instructions that an honest and reasonable person would make, or if they executed the customer's instructions whilst it had reasonable grounds for believing that the instructions were an attempt to misappropriate funds. So, for example, if we were to able to show that money was transferred from Premier FX to another company, and that actually it could be shown that the purpose of that was dishonesty, then the question is, should Barclays have observed their reasonable skill and care and said, we think something is going wrong? Now, I have to say, everything that I've heard about this, and it's still only hearsay, is there are 73 bank accounts and money is moving, flowing backwards and forwards between those bank accounts in a way that the records do not properly support. That is the sort of thing that I believe should be challenged through the application of the QuinceCare duty. So if I just go on to the next slide, so I don't want to take up too much time, right? How do we find out? How do we find out what has actually gone through the Barclays accounts? There is something which I discovered probably about 18 months ago because one of the people I was helping did this. It's called a Norwich Pharmacal Order. Now, we need to understand there are three parties. There is the victim of the fraud, there is the fraudster, and in between them is the bank. Now, the bank holds information about the fraudster. So what this is saying, if I, as the victim, want to take a legal action against the fraudster, I can apply to the bank for the information that the bank holds about the fraudster. Okay, so let's just say that again, because so I had a case of somebody who'd lost £75,000. They did a Norwich Pharmacal Order, and what they could see was where the guy had lived over all the previous 12 years. They could trace his address, they could trace all of his personal details, which obviously would be helpful for the purpose of actually taking a civil legal action against the fraudster. So that is the purpose of a Norwich Pharmacal Order. It is to find out all the details of the way in which the third party. Now, we need to be aware there is actually a little bit of a sting in this as far as the banks are concerned, because what we discovered when we did that, or what my client did when he actually did the Norwich Pharmacal Order, was that 3 months into the 6-month period which we were investigating, the National Crime Agency had written to the bank and said, we think this account is being used for fraudulent purposes, but the bank had done nothing about it. So part of our argument with the bank was, you knew 3 months ago that something was going wrong. And let's be quite fair, if we could raise a Norwich Pharmacal Order against Barclays, Barclays are going to fight tooth and nail to not disclose it, because there's a really serious issue that it is likely to show that Barclays themselves have acted in wrongdoing. But it is a process, and I believe that the committee should look very seriously at taking legal advice on taking a Norwich Pharmacal Order, because if they could get it, it would actually get information about what's really gone on, and that in turn would open the potential for challenging Barclays. So if we could just flip on to the last slide. As we say in Transparency Task Force, it is time for transparency in banking. We need to know what has really gone on, and we need to push to get that information. So thanks very much, guys.
Wonderful. Absolutely wonderful. Thank you so much. I think it's obvious what we should now do, folks. So before we do anything else, we should thank Pauline and Keith and Graham and Richard for wonderful, informative presentations. They've clearly put a lot of preparation time into putting this across. They've done a great job. Can we please show our appreciation first of all? Thank you very, very much indeed. I've got so many questions. I could hog the whole thing myself, but obviously I'm not going to. We've got Peter O'Donnell with a hand up, Mark Bishop, Helen with a hand up. Let's go Peter, Mark, Helen, then to anyone else that wants to follow. Mr. O'Donnell, please first of all introduce yourself and give us your point. Thank you.
Hi, Peter O'Donnell. I'm a director and owner of a law firm. I got involved in financial mis-selling after my bank manager recommended I put all my money into a Ponzi scheme. He was put on indefinite leave when it was found out that it was a Ponzi scheme that had stolen £125 million. The two directors, chartered accountants, went to prison for 7.5 years for stealing £105, which I think is pretty light in the sentence and the money they got away with. I got involved in financial services regulations and claims against financial advisors and banks. And that's where I am today. I think our current client list, work in progress, is around 2,000 clients. I'd point out two things. One, to look at professional indemnity insurance in a lot more detail than probably it has been done. And secondly, working with insolvency practitioners, and I do work with Menzies. I've got a meeting with the Cardiff office tomorrow. People don't know much about director misfeasance. We all use the term malfeasance, but the insolvency service or solvency practitioner use the term misfeasance. It's exactly the same thing, but it's much easier then not to sue the company, as it's very hard to go after a company when it's closed. But the directors, if it can be shown, deliberately or even negligently facilitated the mishandling and the misappropriation of client funds, then the insolvency practitioner can take action against them to recover personal assets. They won't do it unless there's someone's going to finance that because of the risks involved. They don't like risks at all, but there are funders with after the event insurance who will do this, and I know those people. So the money that would come back would go to the creditors, not just the people who say they would like to do this. But it's pretty straightforward, and because they keep getting paid, the insolvency practitioners, which is what they're there for, and to fulfill their obligations according to the Insolvency Act, which generally doesn't mean looking after investors and clients. It doesn't move that. But I also know a lot about the new FCA Code of Conduct for IPs of regulated companies. So professional indemnity insurance, I've got an expert who can look at that. I'm not trying to make any money out of this, and I won't charge anyone anything. But the director misfeasance angle is something I can advise you on, particularly in relationship to Menzies.
Peter, that's very clearly very helpful indeed. I think you're coming up with some very pragmatic points here that can be followed up, and you're being very generous as well in the way that you're contextualizing what you're suggesting. Thank you. Great, absolutely fantastic. Mr. Mark Bishop, your thoughts, please. Then we'll go to Helen.
Okay, thank you. So I'm going to talk about two areas. The first is the role of the bank raised by Rich Demery, and the second one is the question of what the victims should do, which was really raised by all three of those victims. I really think that actually Richard has identified something very interesting, which is if you look at that graph that he showed of the net asset value effectively of the company, its assets and its liabilities, every year its assets and its liabilities are about £1 million, and then there was 1 year when they jump up to about £8 million, and then they drop back down again. Very, very unusual. I think I know why that's happened. I think what's happened is, in all of the years bar one, the figures reflect the genuine assets and liabilities of the company. And the money that is being held on behalf of clients is not an asset of the company. It is simply being held on escrow for the benefit of the investors or of the clients. Similarly, the need to deliver up currency for them is not a liability of the company. These things are not part of the balance sheet of the company. That's how they should be accounting for themselves. But I think in 1 year, they changed the basis on which they account, and all of the money held belonging to clients is reflected as if it were the money of the company. And there is a corresponding liability shown for the FX money that those people are due to receive. Now, the reason why I say that is it was about 8 million quid, and that is not far from the figure at close, which was 11 million quid when the business went under. So I think that that's what's happened. And the question is, why would you change the basis of your accounting for 1 year? And the only reason I can think of is this: the bank was sniffing around. They were saying, why is it that your audited accounts show one thing, but your money in the bank account at the close of the year showed something very different? And the way round it was that they lied. They said, well, of course it was because this is how we run our contracts with our clients. Now, perhaps being naive or being captured, the bank manager chose to accept that. But for whatever reason, maybe a deal was done, I don't know, they returned back to the previous basis thereafter. I think that that is very interesting, and I would be very interested to talk to the bank manager at that specific time, because the fact that it changed and then changed back again shows that something should have been a huge red flag. Next thing I'd like to talk about is what I think the Liquidators Committee should be doing. I think 80% of your job is to manage the liquidators. I'm not criticising anybody, but I think that you could try some different things. And I would probably be saying to the liquidators, we require you, not asking you, not suggesting, we require you to do 3 things. The first thing is to pursue the fraudulent trading and breach of directors' duties claims that have already been suggested by Peter O'Donnell. The second thing is to write a letter to the FCA, which essentially says, we believe that Barclays was either negligent or more likely complicit in this. We would like you to extract money from Barclays to compensate the victims. If you intend doing this, please provide us with the timescale by which you intend to have achieved this goal. If you fail to do so, or if you fail to meet that deadline without reasonable cause, it is our intention to sue you, because we have identified the following failings in how you supervised this firm, and they are extensive. We know about that from the presentations. And the third thing I would be asking the liquidators to do is to go to court to obtain compelled interviews with the relevant individuals from Barclays. It is a power available to all insolvency practitioners under the Insolvency Act. And the idea that Barclays can simply say, our people are unavailable, and the liquidators shrug their shoulders and say, fair enough, that's unacceptable. So those are things I think they should be asking of the FCA. In terms of other stuff, I don't think you should be crowdfunding judicial reviews or this, that or the other. It's good money after bad, it's pointless. What I would be doing instead, the only activity other than trying to manage the insolvency practitioners, would be continuing to make the case to the Complaints Commissioner, as I know that those complaints are on hold, continuing to talk to the FCA about the need for an independent review, and also the Treasury for an independent review, and working with Transparency Task Force to show that it's systemic, because I think what you're going to be told by the Treasury and the Treasury Committee is there are so many of these regulatory failure cases. Yours is quite small. It's from a while ago. We're not particularly interested. Thank you very much. And therefore, as we have with Connaught, the way forward is to say, actually, don't look at this small number of victims from a long time ago. Look at the fact that it's so systemic. This regulator is failing. There are many, many of these legacy cases. The victims in all of these cases need to be compensated, and there needs to be genuine reform. So that's the way I'll be handling it if I were in your position.
Mark, thank you so much. I'm sure that everybody at Premier FX really appreciates the advice. I won't use the word advice. The ideas, guidance that is being provided here. That's absolutely first class, Mr. Bishop and Mr. O'Donnell. I'd like to invite Mr. Paul Barrister, who's Paul Bates Barrister, to share a point. I saw his hand go up. I'd also like to invite Leslie Kerwin after that, if she doesn't mind, to, if you want to, Leslie, just to talk about any ideas relating to publicity. You're a seasoned media professional, and maybe we can try to get some media exposure about this if we were to try to do that. Any thoughts about how we could go about it? First to Paul Bates. Thank you, Paul.
Yeah, I had the displeasure to read everything Pauline shared, and then today to listen to the agonies of people who've done nothing wrong but experience terrible losses as a result of, number one, a regulatory failure. It's a comedy for a regulatory system to exist where a permission is given based on assurances of compliance with conditions, but no verification of compliance with the conditions. It is in effect no protection at all. And what a regulatory model should do, and I think you should press for this to be done, and it may be systemic in FCA permissions, is that there should be third-party verifications from auditors and banks, what monthly perhaps, of ongoing compliance. And that shifts the risk of non-compliance to those parties, and they may increase the price of their consulting or banking services to the permitted party as a result of their own attestation responsibilities, but that's probably a good thing. There's a terrible regulatory problem, and I must say I don't understand why that's so. And I understand about lack of resources to do verifications on the part of the FCA, but they're not the only party that could be required. So that's a problem I'm pleased to see worked on. And then I think previous speakers have made excellent suggestions of potential claims. I think the jumbo payments that occurred in the very suspicious period should be investigated, and insolvency practitioners are supposed to be trained to do that, because I know in Canadian law, payments can be set aside within 1 year of bankruptcy based upon suspicion of dishonesty in those payments. And it sounds, from everything I read and heard today, that those payments haven't been verified as proper and authentic payments. They were done by Rexstrom's family, and no one knows to whom. I mean, that's unacceptable. So a demand should be made, as a previous speaker said, for a verification of records and interviews of parties involved in those payments. Either one of them, it sounds, might provide substantial recovery to claimants. The other comments made I won't repeat, but they're all well put. And I wish the very best to people pursuing these recoveries. But what a regulatory disaster. It's a system designed to facilitate fraudulent conduct.
Thank you very much indeed, Paul. And I know that we'll go from Paul to Pauline, and then we're going to jump back to Leslie, because I'm keen to get Leslie's thoughts on the media angle to this. Pauline, yes, please.
Yeah, it was just to give some quick responses, actually, so that you don't think we've been complete lemons during this process. I'm not saying that anyone has implied that. Mark, you made some very good points about the liquidators, and you can please have our reassurance that we have tried to do all three things that you mentioned. Perhaps I need to have another conversation with you about where we do. The liquidators have resisted us doing these things, and it's been a huge frustration. In fact, we went in to see the FCA about getting rid of them in the middle of 2019, and the FCA were trying to persuade us, to do X, Y, Z. Did not reveal that they'd actually asked the liquidators to do a ton of work, which the claimants have been charged for. It's circa 300,000 for their censure notice. And I didn't get into it in our presentation, but that is another issue, in that the liquidators seem to be doing work for the FCA, which they haven't cleared or shared with the liquidation committee. And this only came out in the court hearing when the judge was questioning their charges. And it's really just quite extraordinary that this can be going on. If the FCA is requesting them to do information, then it should at least have been shared with the committee. We're under non-disclosure, etc. And we should have been privy to, that is actually, at the end of the day, client money that's in that asset pool, and we should have known about it. Now, that's very interesting about writing a letter to the FCA that Barclays is complicit. I like that idea. That is very good. We have given instructions to the liquidators, your point, Mark, on point 3, to compel them. and they just don't reply. So I need to know what we do next. We have tried 3 times, they just don't reply. We've actually made a complaint now, 2 formal complaints, both to the complaints process in Menzies, which is actually their managing director, okay? And she was initially backwards and forwards trying to, communicate with us quite quickly. The minute we actually reminded her that we had tried to get them to compel the interviews with the Barclays account team, she just went silent. And this is what happens every time. They just don't reply. Now, we've reported this to the judge, because the judge also said to them that they made a point in the court, last court hearing in March, that they had suddenly decided to do some claims, having previously told us that they were not going to do any claims because they didn't see any mileage in it, which, we had quite a big argument with them. This was back in March 2019. Their barrister reveals that they are actually looking at doing some claims. And the judge says, well, you are to tell the liquidation committee about this. When we try to get the information, we cannot get it. So there has to be some power or some law that we need to start stirring. We wanted to get rid of them back in June, and it was the FCA that persuaded us to keep them there.
Very interesting. I saw Mark Bushett put his hand up at a particular point when you were speaking, Pauline. So apologies, Helen and Leslie. We're going to go to Mark relating to that point. Then we're going to go to Helen. Then we're going to go to Leslie. Mark, thank you.
Okay, thank you. So I'd like to answer Pauline's point, because this is a problem that we had in the Connaught case. There were several firms involved in Connaught. Each had a set of insolvency practitioners already appointed, and they were all to varying degrees, either directly crooked ones or ones that were heavily conflicted, or both. And the way that we dealt with it, based on very good advice from a non-crooked insolvency practitioner, is basically to say to them, either you do what we tell you to do, or we will report you to your professional body, and we will make a formal complaint, and we will use publicity, particularly in private eye in this case, to drive that complaint forward so the professional body can't sit on it. So one of the guys that we did this with voluntarily resigned his position, and that was great. Another one we did it with, interestingly, already had an extant complaint about him, and we worked with the professional body basically to say, look, this self-regulation, this industry is going to be undermined if you don't go after these people for their previous scam, so let's agree a deadline for them to leave the industry. And that was done, and the guy did leave the industry because he's got a lifetime ban. The important thing to remember about these disciplinary procedures is they affect the individual, and basically it prevents them from earning in this industry. And this is an industry where a reasonably competent partner earns £500,000 a year. So they don't want to lose that. And I do believe that the threat of making a formal complaint to the professional body and going through with it is likely to get those people to do what you're telling them to do, particularly if you also point out that they could personally be liable if they do not pursue courses of action that could result in recovery and money is lost or interest is incurred because those claims are delayed or they're made less valuable.
Can I just quickly say, Mark, thank you for that. And we have actually already put that in our witness statement to the court, that we consider them personally liable. So we have kind of like started that, but you just put much more shape around it, Mark. So thank you very much. I also just wanted to quickly say that the personal indemnity insurance was never held by Premier FX, which is a condition of being an authorised payment institution, is that they are supposed to have capital protection insurance. They never had it the entire time they were in operation. I mean, how is that allowed?
Okay, Pauline, can I say that that's another aspect of your potential claim against the FCA, because one of the things that they are required to do is to ensure that all authorised firms have sufficient financial strength, either in their own balance sheet, and we know that was tiny, or alternatively in their insurance cover. So again, you need to be telling, not asking, the insolvency practitioners to write to the FCA to give them a period of time to extract the money from Barclays. Otherwise, the insolvent estate will be going after the FCA.
I'm genuinely proud that we have a forum here where such first-class input is being shared freely amongst like-minded people who frankly care. This is an achievement, folks. This is an achievement. It really is. Well done, Mark. Well done to you. I'm going to go to Alex Varley-Winter for her comments on the media side, because Leslie Cohen's had to jump off in a moment. But before I do, the point was made earlier, I think by Mark Bishop, that these problems just keep coming up time after time after time. I have to say, we are seeing some really serious patterns here of failure to regulate, failure to enforce, failure to investigate. All the institutions that I once had so much trust and confidence in, I do not any longer have trust and confidence in them, and it's really quite worrying. When you think about how much of UK PLC is our financial services sector, and you now think about how badly regulated it appears to be, there's reason to be rather concerned here. This is a big problem we're looking at. A big problem. It can't be coincidence that so many issues keep coming up time after time. Alex, could I put a question to you, please, Alex? Obviously, please introduce yourself, tell everybody what you do with TTF and elsewhere, and just share your thoughts about any kind of media publicity angle here to try to get a bit of attention on this. Thank you.
Oh yeah, sorry about the noise in the background. It's clangers playing for my daughter. But yeah, I write Transparency Task Force's blog. Usually it runs weekly and covers a lot of these issues. And I'm also an investigative journalist for about 10 years and do freelance work and research and all kinds of kind of crime journalism related stuff. I mean, my first thought with these cases is it's so complex that you're not going to get a fast news desk unless they're already across all of the issues, like say somebody like, yeah, I don't want to make assumptions, so I won't name names, but like if they're already deep subject matter experts, you could go to them and say, you know, do this suspected financial crime story. But otherwise, you'd probably want an in-depth treatment, some kind of podcast, perhaps contrasting the Ready to Invest and Connaught cases with this one, so you can see that it's systemic, but also just casting up the kind of personal aspects of it as well, and just the gloating of some of the people involved. I mean, it's just abhorrent. So yeah. I'm aware that some of this might be potentially legally sensitive or investigatively sensitive, so that's something to consider, in the sense that if you want to recover monies or prosecute people, then perhaps you don't want to be discussing all your tactics in like a public forum. So, you know, strategically it might need to be thought about in terms of editing for like broadcasts and things like that. But yeah, like it's really interesting, and financial crime is like, people actually love to learn more about it. You know, loads, like, you know, if you look at Netflix top hits, like a lot of the documentaries are to do with financial crime and how the monetary system works, all these kinds of things. So yeah, I mean, there's definitely scope for exploring it in more depth.
Thank you very much indeed, Alex. Thank you. Let's throw it open. So I'm in gallery mode. I can see everybody's faces. I can see Graham would like to say something. Please do, Graham. Thank you.
I just wanted to mention the Treasury Select Committee, Andy. Right at the very beginning, you suggested that the TTF write to the Treasury Select Committee, which we'd be glad of any support. But our experience, particularly recent experience with the Treasury Select Committee, it really is rather a toothless group of people and very dependent on who is on the Treasury Select Committee. As mentioned by Pauline, many of them have got a banking background, and it does make you wonder the way in which they form their own views and opinions of these situations. In addition to that, we've found that the Treasury Select Committee is really, really poor at challenging the responses that they get from the FCA. And there has been several examples, but one glaring example was just recently when the response they gave to a question by, who was the MP at the time, Mike Hill. Mike Hill had obviously, I have to say, been prior to the meeting, he'd been given something with 2 or 3 questions to ask, because clearly there was no intent in his manner, his body language. He was reading something that it looked as though he'd been given, and it was simply a case of going through the motions and asking a question for asking question's sake. The response to the question was that the FCA, as far as PFX were concerned, they were authorised and regulated by a light touch authorisation and regulation. Now, to me, the obvious response to that would have been, are you suggesting there is a different standard of authorisation and regulation? Now, there was no challenge to that statement whatsoever. So here we are, the FCA openly admitting that they now appear to have at least one and possibly several different standards of authorisation and regulation. Nobody knows that. It's not written down anywhere. It's not advertised. It's certainly not in their register to suggest that a company such as PFX are in fact regulated with a light touch, whatever that really means. Yeah. But that should have been challenged. And unfortunately, at the moment, the Mel Stride really needs to get to grips with particularly the FCA, and I suspect other regulators that find themselves sat in front of the Treasury Select Committee.
Thank you very much indeed, Graham. You make very, very compelling points. Richard Emery, thank you.
Can I just say that I'm looking increasingly at the general role of electronic money issuers and authorised payment services as places where fraudsters have moved to following the implementation of confirmation of payee. And I'm dealing with a number of high value cases where people have transferred money into what they thought was a genuine bank account. And actually it has turned out that it was money that was being paid to an electronic wallet in an authorised payment in an e-money issuer or a payment services company. And I'm very concerned because I asked the question of the FCA's consumer group, consumer helpline, about a company that I believe is operating regulated services and is not regulated. And their response was, if it's not a regulated firm, we're not regulating it. So if you provide the service, but you don't register, then you don't get regulated. Now, I think that's a somewhat worrying position. But just so that you understand the numbers, right, so we get some idea of the scope of this, there are 200 retail banks in the UK, which is where the FCA obviously is meant to make its focus. There are 253 payment services companies and 85 electronic money issuers. So there's an awful lot of scope there, and an awful lot of them are relatively small, but they are actually the place where fraudsters are now going. So they really, really do need to get the process in place.
Thank you, Richard. Thank you very much. I'm going to invite, if he's happy to, I'm going to invite Ian Tyler to share his thoughts, if he has, about this Premier FX situation. Ian's a very knowledgeable guy, and he's helping TTF on a number of fronts. Ian, any comments that you'd like to make about what you've heard this evening? Thank you.
I mean, I don't think I've got that many comments to add. I mean, I've obviously had some conversations with Pauline. I thought Mark's comments were incredibly helpful and apposite. I mean, at one level, I almost wrote on the chat, it's amazing we don't actually have more fraud cases, you know, because having listened to the fact pattern that I've, listened to, I'm almost, it seems it seems relatively straightforward to actually set up a fraudulent business and dress it up as a payment institution, and relatively speaking, quite low-hanging fruit even. So it's surprising we don't have more. There's no question that there is a world of difference between light touch regulation and what has actually occurred, because they haven't done any regulation. I mean, this fact that they haven't had an insurance policy for donkey's years is just in itself quite, you cannot justify that. I mean, if you're going to have any regulation, you should have proof that they've paid the premium, got the policy, simple as that. Even if it's light touch, that would, be a requirement. And clearly, whilst Barclays, I don't think, are fully responsible for what's happened, there's a number of good points being raised by Mark. They would have had to do an annual credit review. The fact that there were no segregated accounts except for one or two very minor currencies, it's quite negligent, their behaviour. So as I understand it, the regulator is looking into Barclays, but and I was talking to Pauline. My expectation is what's happened is the regulators produced a report about Barclays. It doesn't show Barclays in a good light, and but Barclays are pushing back, because I suspect Barclays' attitude is, but you as a regulator are pretty hopeless as well, and you're partly to blame, etc., etc. So I suspect they're almost having an argument off screen, if you see what I mean, discussing how they split the culpability and things. But that could take many, many months. You know, obviously, if you're Pauline, you want to go after Barclays first, and if you don't get it from Barclays, then you'll go after the regulator. I mean, that there isn't much else to say. It's quite depressing, really, in that sense. But I do agree with you, Andy. I think we should make it. We should try and make this. There's a systemic point here about just a failure to regulate, in any real sense of the word, whole swathes of financial services. You know, the FCA has been set up with this incredible structure whereby, you know, it's very, very, except for banks, it's incredibly light touch. I mean, there are companies like New Day that have millions and millions of customers, you know, non-prime lending. You know, they've got millions and millions of credit customers, and yet they don't have an FCA. They're not regulated by the PRA because they're not a bank, and yet they don't have a dedicated relationship person at the FCA. They phone up and they get whoever's on the thing, and they affect millions of people in the UK. It's just incredible, the level of light touch. You know, so.
So thank you very much indeed. These are very helpful inputs. I'm going to share my screen. So here's an article. It's 4 years old, but I really don't think that the thrust of it has changed very much. This is Roberto Saviano. Roberto Saviano is a pretty well-known anti-mafia journalist. So he's a rather courageous chap, rather obviously. And he was speaking 4 years ago about this. London is the heart of the global financial corruption. And London comes up time after time after time as being the kind of headquarters of money laundering. And one can't help imagine, I'm giving a general point here, one can't help but imagine that perhaps if somebody was involved in money laundering activity, whether they might see currency transfer activity as a good sideline to get into in some way. I wonder if that might have anything to do with this. And I can see we've got Mark's got his hand up, Pauline's got his hand up. Mark, could you cover off two things for me, please? Could you make the point you want to make, but could you also talk about the idea of an independent oversight body at the FCA, an idea to get the FCA to do its job properly? Please cover those 2 points for me, Mark. Your point plus that one. Thank you.
So the point I wanted to make is, I think it is really good that we have these sessions, because what comes out is common trends and behaviour. And Ian said something just a couple of minutes ago where I actually thought, if you were right here and there wasn't for COVID, Ian, I'd be shaking your hand, because you've exactly hit the nail on the head. And it's this. I bet you what's happening is that there is at the moment a kind of question of who blinks first going on between the FCA and Barclays, because the FCA is saying quite rightly, Barclays, you screwed up. You were not keeping an eye on this client. The behaviour of their account was not consistent with what they were telling you. And Barclays, equally rightly, will be saying to the FCA, yeah, but you people are supposed to be supervising these idiots. You did nothing at all. Now, this is exactly what happened in the Connaught case, because in the Connaught case, it was very easy for us, you know, the victims, within 3 months of finding out we'd lost money, to demonstrate beyond all doubt that there was both significant negligence and cover-up by Capital Financial Managers, the first operator of the fund, and significant failure and cover-up by the FCA/FSA before it. And we were then, of course, in negotiations with the FCA, and they then had to go and negotiate with Capita. And for ages, Capita didn't want to pay out, because quite rightly they said, yeah, but you guys are to blame as well. So effectively what we had to do was to bully the FCA. We were saying to them, look, you know, the longer this goes without you extracting money from Capita, the more collusive this relationship looks. You guys are like two criminals. It's like the prisoner's dilemma. You are locked in this vow of silence, but we're going to prize you apart, and one of you is going to break, and it's going to be you. So that's how we were able to extract a total of about £80 million from Capita. Of course, the problem then is that the FCA, this is just a side issue, then said it would go after the other party and it would go for the FSCS when that party became insolvent, and it hasn't done that. So effectively, we've now got to go after the FCA for all of the interest and the time costs and so on. But that will happen in time. But I think what's happening in this case is exactly a parallel. And I think that the process that I described, which has to be done by the insolvency practitioner, is how you prize apart the two perpetrators and you get the FCA effectively to extract money from the bank. That may just be your initial capital. It may not be 3 years of interest and time costs, but it'll be a start. Then you can go after the FCA for the rest. And now I'm going to talk about the thing that Andy asked me to talk about, which is a supervisory board or council. So many of you may have heard Andy Shmulo, an Australian academic, talking on some of our events. And he is fascinating because he contributed very significantly to the Hayne Commission, the Royal Commission in Australia about banking and financial services. And he talks about regulatory capture. And a classic solution that he identified for regulatory capture is, I understand, now being pursued, being made part of the law out there, and that is that ASIC will be overseen by a kind of supervisory council. So the idea is to create a separate organisation whose members are not chosen by the regulator, independent of the regulator, who keep an eye on what it does. Now, recently you may be aware that both the Treasury and the Treasury Committee have launched reviews called The Future of Financial Services. And the FCA, and Transparency Task Force has responded to those calls for evidence. I've been involved in working on some of those documents. And we put together a proposal for what we called the Financial Regulators Supervisory Council, FRSC. And the idea would be that the LCF and Connaught creditors committees, simply because they're the two parties that have had independent reviews, Transparency Task Force and Whistleblowers UK would be responsible for running a recruitment process to appoint the first 4 members of this council. Once that's done, those 4 members would appoint the next 3, and thereafter those 7 members would replace themselves one by one as they serve their term and are replaced. Therefore, there could not be FCA, Treasury, Bank of England or other kind of city interest involvement in who would run that council. And the council would have all sorts of responsibilities, like it would appoint the complaints commissioner, it would do an annual report on the effectiveness of the FCA, it would be able to investigate, thematic complaints about the FCA. Jointly with the Treasury, it would be able to appoint and sack the chair and the chief executive of the FCA. It would appoint 2 of the FCA's non-executive directors. So effectively what it would have is a very strong influence on the direction of the FCA, ensuring that it genuinely reflected the interests of financial services consumers. Now, do I think this is going to happen? No. I do think there are very powerful corporatist interests, particularly in Treasury, that would reject this idea, but I think they would reject it because it's a bloody good idea. And bloody good ideas, if you keep going on about them long enough, eventually have a habit of happening in one way or another.
Thank you very much indeed, Mark. Your input tonight has been absolutely outstanding. I'm going to share my screen again, then we're going to go to Pauline and Helen, I think. So I'm sharing my screen to show you this. So this is the Financial Services Consumer Panel's website. I'm sharing it with you because this is the part of the regulatory framework that's basically there to represent the consumer interest, hence the name. It is the Financial Services Consumer Panel. But I'm going to draw your attention to a couple of things. The first is, if you go to the what is the panel part of the website, which I'm taking you to now, if you were to read all of those words, which I'm going to put into the chat, you will see that this panel is designed to do exactly the sort of thing that it's supposed to do, perfectly in keeping with the parliamentary intent behind the creation of a Financial Services Consumer Panel. So far, all hunky-dory. However, if you then go to who is on the panel, and I'm not making any particular comment about any particular individual at all, but what I am going to draw your attention to is this. Membership of the Financial Services Consumer Panel is constructed to represent the various sectors within which regulated financial businesses operate. Often, that's an interesting word, often based on nominations made by trade associations, by trade bodies, by the industry. So hold on, let me think this through. The purpose of the Financial Services Consumer Panel is to represent the consumer's interest. Obviously, for it to have any hope in hell of achieving its stated aims, it needs to be populated by people who have an interest in, and only in, the consumer perspective. Not necessarily all of them, but at least most of them. But here we have this rather unusual admission by the Financial Services Consumer Panel that most of its members are people with a financial services trade association connection.
Getting paid.
And if you were to look into this a bit further, I'm sure you come to the same conclusion as I have, which is this: there is a complete lack of proper, authoritative consumer representation in our financial services regulatory framework in the UK, and that must be at least part of the problem. There does need to be proper independent oversight, and that is a theme that just keeps coming up time after time after time. Let's go to Pauline Creasy, then we'll go to anybody else that's itching to say something, and then we'll draw things to a close. Pauline, thank you.
Thanks, Andy. I'll be quick. I wanted to agree with what a number of people said, including Mark and Paul Bates. We're arguing the same thing. APIs or the electronic money people, if the FCA is not going to regulate them, then they should stop authorising them, close them down, or have a new agency regulate them. It can't stay as it is. It's an easy vehicle for fraud. And I think, as Richard pointed out, it's being increasingly used. And they all need to be independently audited, regardless of what volume of business they're turning. The other point I wanted to mention, does anybody know, because it's something that occurs to me at sort of like 4 a.m. in the morning frequently. I was a regular payment service user with Premier FX from 2006. I'm one of the few people that knew it right from the beginning, right through to 2018. And I didn't leave any money there for many years. It was only when the house that I was purchasing in America fell through the first time, and Premier FX offered to hold the money in an escrow account. And this is why he had a large amount of my money. If it hadn't been, if the sale hadn't been delayed, basically it wouldn't have happened. But anyway, it did. That's what happens in life. But for many years, I was doing transactions that really were under 10K. There was one that was at 15K, but most of them were under 10K. What I find unusual, and there's a lot of claimants in this position, I suddenly transferred, first of all, I think it was 89,000 euros, because that was the deposit from the sale of my place out in Portugal. And then I moved, the bulk of it, which was, close to 300,000 euros. Now, should that not have been flagged in the bank? Should they not have been asking, well, even if they didn't know my name, it was coming from the same Portuguese account each time. Shouldn't they have been asking, why is this claimant suddenly moving large amounts of money? Or why are these large, even if they weren't identifying it as mine, were they not asking Premier FX, why is there suddenly large volumes of money coming in, which are then either being used to pay someone else, but they're not going through as that particular claimant's transaction? Because Barclays must have known the business that Premier FX were engaging in. So if my 289 came in and was being used to fulfill somebody else's transaction, that should surely have immediately been red flagged in Barclays. They should have seen that. So I was just wondering if anybody knew that. Because I've thought about that a lot. I went from doing quite small payments, relatively small payments, under 10K. Suddenly I moved 2 large transactions in. Should that not be red flag? As I understand anti-money laundering, they should have been asking Premier FX, who sent that money? What's the purpose of it? Where's it going?
Wow.
And then, sorry, and then just another question to throw out really to you, Andy, and anyone else. We have actually had an MP who represents a claimant in Scotland, Patrick Grady. He's actually written a very good letter to Kevin Hollinrake, saying to Kevin, look, I've been watching this over 2.5 years, 3 years. I'm concerned that nothing's being done for these claimants. The Treasury Committee should have done something, but they're not doing it. Could Kevin, with his fairer business banking, hold an inquiry, or at least start an inquiry on our banks supervising their business customers adequately and using, you know, Premier FX and anything else, you know, as case evidence? Now, Kevin has written back saying he does not have the powers to compel people to come in and give witness statements. But Patrick is in the process of writing back based on guidance from us to say, we don't really think that matters. Just get in whoever wants to come in and talk about it and at least get the ball rolling. And then maybe if there's enough publicity around it, it will force the Treasury Committee to do something about it, who can compel the FCA or Barclays to turn up and give evidence, you know, whoever. So I don't know whether we can put pressure on Kevin. I get the impression he's not keen at all, actually. Perhaps he just doesn't want to put himself in the firing line. But it strikes me that it is something that the Fairer Business Banking APPG could actually start in a fairly low-key way.
For what I've seen, Pauline, this is a personal comment, I think he's very happy to put himself in the firing line. He's done it on numerous occasions. You've only got to, for example, look at his recent speeches in the House of Commons about the mortgage prisoners. He's highly critical when he sees there to be reason to be critical. It may be more of a bandwidth issue, I don't know, but why don't you keep me posted on how that develops? Because it's a very good idea. It's a very good idea. I think it's unrealistic that there's going to be any one silver bullet that's going to solve all this stuff. My thoughts are many of the ideas being talked about tonight are worth executing in some way, and you've got to go in kind of all guns blazing, but work out where the soft underbelly is. Yeah, work out where the Achilles heel is. Work out where the weak spots are. It seems to me that, for example, the points that Mark Bishop was making earlier of making the insolvency folks, the liquidating folks, do what they're supposed to do is a really good place to start. I'm going to go to gallery mode so I can see everybody. Please just wave at me if you want to say or say anything or ask a question. Otherwise, we're going to start bringing things to a close. Okay, we've gone over by half an hour. I'm comfortable that we have, because there's been such rich content this evening in terms of explanation of the problem, in terms of sharing ideas around the potential solution. We've had absolutely first-class presentations and preparation by Pauline, by Keith, by Graham, by Richard. Superb comments from Mark Bishop. Well done, Mark. Really good insight here. Helen's added a lot. Lots of people have added a great deal. Richard Emery's talk was a masterclass on the particular areas that he spoke about as well. So can I please invite us all to do a couple of things? First of all, please don't make the mistake of thinking that the event is the beginning and the end of it. It's clearly not. Yeah, there are systemic issues that are going to take time, effort, coordination to tackle. The Premier FX problem is symptomatic of the real problem. The real problem is we have a regulatory framework that seems to consistently disappoint consumers who are looking for a degree of protection. You know, not more than they deserve, just what it says on the tin. You know, the Financial Conduct Authority is the authority in relation to financial conduct, and they've got various statutory obligations, including consumer protection. There's something going systemically, consistently wrong here. Okay, we'll bring it to a close. Can I please invite everybody to join me in thanking all of our speakers and everybody that's contributed tonight. Thank you very much indeed. It's been, in my opinion, a first-class session, and let's pick up from here. Thank you very much. Okay, we'll wrap it up there. Thanks all the speakers. Thank you everybody that's participated. Let's keep at it, because there's no point giving up. We're somewhere down this journey. God knows how much more there is to go, but if we keep trying, we'll get somewhere. I'm very sure of that. Thanks all. Good night. Thank you.